Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexbsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexbsummit.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Now as usual we will take a look at the gold market. Well guys, before we're continuing to talk on the short-term situation in the gold market, I would like to say that currently it's maybe not so interesting what we will get on the gold market per se. So because its overall situation here doesn't show any clear patterns yet, and probably it will need some time to the gold market to go in habit with the current new levels that it has been reached around 1350 area. And something probably still should happen with the overloaded speculative long position. So we still keep with our opinion that hardly market will continue to move higher immediately. So some relief. Market needs some relief to offload some positions to prepare some potential the room for the further upward action, and this probably should happen by the taking profit from the speculators and the short-term speculators. Maybe ADP report and non-farm payrolls release that we will get today will bring more clarity, or maybe it will trigger some action. But currently, guys, it seems that market definitely needs some catalysts that will trigger some changes on the market. And maybe the statistics that we will get today, tomorrow, could become precisely, but this type of information that could push market in one or other direction. But at the same time, guys, it's a very interesting situation right now in Europe. If you're monitoring some news, so there's probably two major points that we should pay attention to. First one is the problems of the Deutsche Bank, and if you will take a look what's really going on with it, it mostly replies and repeats the destiny of the Lehman Brothers. So it's absolutely the same action. So first, shares are dropping to the bottom. Right now they renew the lows. Second, currently is the interbank loans sector in Europe really has contracted significantly, so it will be really difficult to get the necessary liquidity to the bank of such hugeness, such huge amount, such huge size as the Deutsche Bank. So that's why any even minor problems with liquidity could lead to the collapse. And overall, European banking sector, if you'll take a look at the index, the banking index on the European banks, the shares are dropping, so their stands very close to the 2008 lows on when this was the real estate market crisis in the world. So it's really it's a very dangerous moment. Second, even more interesting is that maybe you know that some property funds in the United Kingdom have stopped the trading of their shares and has stopped the payout to the investors. So a couple of weeks ago we have discussed this moment because the Phantom Consulting. So if you're following to our forex researches, weekly research, you probably should remember that when we have talked on the Great British Pound, we said we have posted the very interesting research from the Phantom Consulting, and they talk on the bubble on the real estate market in the United Kingdom, and they said that as a result of the Brexit, this bubble really could start to blow. And it seems that the first signs of this we already is getting now. So 3 funds already has stopped the payout to the investors. So investors can't sell the shares and get investments to their funds. And 3 of them have stopped the trading of the shares on the stock market. This is very important because this could lead to the massive sell-off in real estate market because funds will need money to make the payouts to the investors. This will probably collapse the prices in the United Kingdom on real estate. And simultaneously, this will strongly impact the banks, because the banks, the finance, provide the cash, the funds to make the purchases of these real estate objects, provide the loans to these trades. So this really could become some kind of the same as the 2008, but a bit smaller size, and in the United Kingdom. So all these two moments definitely will have the impact on the gold, because these signs are not positive to gold. This gold market is the market of the inflation. It grows when inflation grows. The collapses, such as bubbles on the stock market and in the real estate market, will hurt the economy, and will definitely lead to slow down of the economy, and just increase the time of the recession and the stagflation in the economy. This probably will not be positive. From that standpoint, keep in mind on the news, guys, right now, especially on the property market in the United Kingdom, because they really could start to make impact on the gold market. It's as soon as they will become louder and more information will appear in mass media. So this really could make some touch to gold. So here we just have discussed on the follower time frame chart, this is minor channel, so you can see market has turned to some upward direction. Nothing really is going on here except maybe this bearish divergence that we have, and overall action doesn't look like the thrust. So this is some kind of it looks like, guys, something is going on here. So something is coming to happen. But we probably need to wait a bit for some triggering moments. Maybe ADP report today will be the one that could really open what's really happening here. On the hourly chart, guys, yesterday indeed we have got the double repo sell pattern. As you can see, closed below 3x3, closed above, making the new top, and closed below. That was the confirmation bar for the double repo, and even market can start move down. But right now, take a look. This is not real typical for the double repo pattern. So double repo is formed. This market usually drops significantly, but that's some kind of probably some just indication of the indecision. So market just waits for the numbers and what will happen. Currently, most expectation stands in the positive numbers and the positive revision, upside revision of the previous numbers. So this could really make short-term speculators turning to the trade, to the taking profit. This really will happen. It's probably we could get the retracement that we have just discussed. So guys, let's see what we will get. But currently, as you can see, it's nothing really could be done here. It's maybe some shorts could be taken in anticipation of the ADP report, but except this double repo would not have any clear patterns. Besides, the volatility will be very strong. I will not exclude the possible really very good spikes in up and down. So maybe I think that it's not really necessary to take the shorts right now, because if a downward retracement indeed will start in the nearest future, then probably we'll get a lot of opportunities for taking the short position on some retracement, and that will be much safer. So I do not see any reason to trying to right now catch at the top of the market and taking this not necessary risk. So now, guys, all that we could do is just wait for numbers in the ADP and then non-farm payroll release, and hope that they will push market in one other direction, and we will finally get clarity on some patterns maybe for trading here.